Welcome everybody to this week's biweekly community call. We hold our community calls on a biweekly basis, talk about the latest state of DeFi in risk and yields, talk about the latest covered alpha, which are the new listings on the Nexus Mutual UI and OpenCover, have updates from the team from Hugh, and review some of the latest updates in governance. Let's kick things off with a brief review of the state of DeFi. Brave, how is the state of DeFi these days? What are your notes? Take it away.
Yeah, good morning, everyone. I'll give a brief overview of the market before we jump into new listings. But overall, the market seems to be in a holding pattern. Looking back on a 3-month time frame, ETH is just 3% higher than it was 3 months ago, and we're down 14% from the local high at the end of May when the announcement about the ETH ETFs went live. So everyone seems to be waiting for the S1 approvals on the ETH ETFs, which would allow these ETFs to be issued. This narrative is currently driving the market and demand for leverage, in my opinion. The current funding rates for ETH and stablecoin yield rates on chain kind of bear this out as well. Everyone's just kind of waiting for something to happen on those ETH ETFs. But looking at the stablecoin yields across major markets, they range from 8% to 15%, with a DAI savings rate setting that 8% yield floor. This is down from rates a few months ago, which averaged above 20%, but some factors in the market have changed since then as well. The funding rates play a big role since Athena was driving a lot of the demand for leverage and stablecoin yields. Yields on Athena have gone down considerably. I think they're around 10% right now. And the Pendle markets drove ETH-based yields in the last several months with their fixed yield markets for LRTs, but those yields have fallen from their 30 to 40% average down to sub 20% yields. Still quite attractive for ETH-based yields, but 50% of what they were months ago. Those original Pendle maturities that everybody was deposited in that were really, really popular, they ended here at the end of June. I think it was the 24th and the 26th for most of those maturities. So there was a pretty large outflow of LSTs from the Pendle markets. Some people chose to roll those over, but we're just kind of seeing a drop off after those expiries. Looking at ETH-based yields on lending markets, those range from 1% to 7%. So again, kind of the base rate for ETH-based yields is going to be the ETH staking yield, which is between 3 and 4%. The notable exception would be Notional Finance leveraged vaults on Arbitrum. So Notional recently got ARB incentives through an Arbitrum grant, and they are offering those in addition to leverage yield on the Balancer Aura markets. So ETH in these markets can reach up to 50% APY when the ARB rewards are factored in. There are rates on stablecoins and ETH on Arbitrum, somewhere between 20 and 50%. So pretty high yields there, but that's kind of outside of the market average. So there are still solid yield opportunities that exist on chain, but I would expect yields to increase if those ETH ETFs receive S1 approval or if there is some other catalyst for a bullish narrative in the market. Leverage would increase, yields would increase, and I would expect funding rates to go up and kind of see another push within the market. But in the meantime, you can still earn yield and protect your positions with some of our new cover listings. On the product and risk side, the product and risk team has been pretty busy. We've added over 37 new cover listings in the last couple of weeks. I'll quickly run through the list, but a lot of these protocols have been requested by users, or these are areas where we're seeing demand for coverage and an increase in deposits. On the protocol cover side, we've listed Superform, XtraFi, Moonwell, Instadap Fluid, Silo Finance, Overnight Finance, Symbiotic, which is the new restaking protocol, and Spectra, which is a yield market. So a lot of these, like the XtraFi, Moonwell, Overnight, these are all within the base ecosystem. Some of these other ones are newer lending markets, and Superform is a yield aggregator that is cross-chain. On the bundled protocol cover side, we've listed more EtherFi-related products. So the EtherFi Liquid Market Neutral USD Vault, the Super Symbiotic LRT Vaults, and then the EtherFi Carrick Pendle Bundle. We've also listed bundles for the Mellow market. So there are several new listings for symbiotic, mellow, and Pendle markets, as well as some markets for SUSDE on Pendle and the SUSDE listing for the Carrick Pendle market. We've got some other Pendle bundles for Puffer and Bedrock as well, one for the CRV USD Silo Pendle market. We have some listings just for Mellow. So Mellow is a permissionless restaking layer that's built on top of Symbiotic. So you can think of this as an LRT built on top of a restaking protocol. We have some of those individual markets, the Mev Capital, RE7 Labs, Stakehouse, P2P markets. We have the Morpho Blue and Metamorpho markets for Stakehouse, RE7, Gauntlet, and Block Analytica and B Protocol. We've listed some bundles for Toros Finance for some of their bull vaults for Solana, Ethereum, and Bitcoin. Those are on L2s. And then the Toros Finance Andromeda Yield Vault, which is on Base, where they're kind of aggregating the yield from the synthetics incentives that are being offered for liquidity providers on Base. We've also got the Origin OUSD bundle, which covers the strategy that underlies OUSD, a Beefy Aerodrome bundle, one for Beefy's Concentrated Liquidity Manager and Uniswap B3, an Index Co-op one that bundles together Set Protocol V2 coverage and Index Co-op coverage, and then the Notional V3, Balancer V2, and Aura bundle, which is going to cover that leverage vaults on Arbitrum and Ethereum or wherever Notional is, as long as it's an EVM compatible chain. So that's quite a lot, I know. We've been adding more listings to gauge initial demand on some products, and we've also been adding new listings based on requests from members. So if there is a new protocol or a bundled cover listing that you would like to see on Nexus Mutual, just feel free to reach out to me. Send me a DM on Twitter, reach out to me on Discord, and just request a review. You can also reach out through our contact form on the Nexus Mutual website. I know I went through a lot here, so before I move on, does anybody have any questions about these listings? If you do, just feel free to raise your hand and I'll call you up. All right. If not, I'll move on and talk a little bit about the Stakewise EtherFi investment signaling votes. So over the last several weeks, Avant-Garde and EtherFi have proposed investment strategies for the 6,585 WETH that's currently idle in the Nexus Mutual Enzyme vaults. The Avant-Garde team has proposed allocating that idle WETH to the Chorus One Stakewise V3 vaults in their RFC, while the EtherFi team proposed allocating this WETH to an investment in wrapped ETH in their RFC on the forum. So members have reviewed both of these proposals. They shared their thoughts on how the mutual should allocate these funds, and members indicated that they'd be open to splitting the allocation across two strategies. So the investment committee created a signaling vote on Snapshot that used weighted voting so that members could vote and determine what split they would support ahead of moving this to an NMPIP or a Nexus Mutual Protocol Improvement Proposal. So before this can move on chain to a vote about how we allocate this capital, it needed to go through that governance process, needs to go to a final proposal, and we needed to figure out what that split was. So we put up the Snapshot vote. It was open for 5 days. The signaling vote saw quite a bit of activity and quite a bit of voting on it. And then once that vote had closed, members had reached a rough consensus to split the investment allocation, with 75.88% going to the Chorus One Stakewise V3 vault and 24.14% going to EtherFi's wrapped ETH. So now that the investment committee has a clear signal on how to proceed, the next step is for them to prepare an NMPIP, which will be posted on the forum in the near future. Once that's been up for roughly 2 weeks, this can proceed to an on-chain vote where members can vote on whether to move forward with investing that idle ETH held in the mutual's Enzyme vault to that strategy or not. So when that goes to an NMPIP and when it goes on chain for a vote, look for announcements on Discord and Twitter. We'll include updates in our next issue of the newsletter that comes out in July as well. But before I hand things over to Hugh, does anybody have any questions about the investment discussion or the investment signaling vote? All right. If not, I'll hand things over for Hugh to give his foundation update. Hugh?
Cool. Thanks, Brave. Yeah, a few things going on. I guess the first thing to mention is last week we did a bug-related upgrade on the smart contracts. It was a relatively minor one on the staking side of things. No funds are at risk, but it created some accounting issues on some of the staking pools and prevented some of them from being delegated to and stuff. So that's been fixed. You can see the governance action on chain if you have a look. So yeah, no major issues there, but that was a little bit of work on the foundation side to get that all sorted. I guess other things going on. We've released 2 new products last week, and excuse me, and they've gone live. So really kind of happy with this stuff. If you dive into the dashboards, you'll be able to see them. But and I'm sure the other people are going to be making some bigger announcements coming forward. But just to give you some insight, OpenCovers in combination with us have kind of worked together to create a product called Transaction Cover, which basically covers a whole bunch of people just for the very short period of time where they're doing an on-chain transaction. If they interact with a bad smart contract or something odd happens, like maybe on a bridge or something like that, then you can get cover for that. So it's kind of bought in bulk on behalf of a whole bunch of users conducting transactions, so it doesn't like have a massive gas cost on every single transaction. So that's pretty cool, and we're looking to work with OpenCover to spread that more widely. So hopefully you'll be hearing more about that one. But yeah, they built the first cover on that last week, which is great. And I guess the second one, which is pretty big news, so you can probably see some really decent cover buys coming through. Our biggest one since we launched V2 actually, so it's for over 12 million. But we launched Fund Cover, which is a specific product tailored for funds that are operating within DeFi, basically allocating either ETH or stables and earning yield on them. So yield-based funds, and we've developed some tailored wording for particular funds that can like basically cover whatever they're allocating to, and they don't have to buy cover and manage their cover positions for lots of different protocols. They can buy like one bulk coverage, and as long as they stay within a certain risk framework, then they can be covered. So I think that's really interesting, and this, you can see some pretty chunky cover buys coming through, and that's actually resulted in the yields on the staking pools going quite high. So you can see a couple of them have hit the 30% mark pretty recently. So have a look at that. There's obviously some risk involved, but members have an opportunity to delegate an XM if they wish. So there's some pretty good news on the product side. We've been working on this stuff for a little while now, several months, but it takes a while for it all to come together, and it's really great to see it live. So hopefully we can grow both of those with some new clients and stuff as well. So and there's some pretty decent I guess cover fees coming in on those, so they're reasonably high rates because there's a decent amount of risk, but the rates are there, and I think they're fairly priced. So I think that's a big kind of validation for the mutual develop how we can really kind of get out there and develop new products pretty quickly. I guess on that front, that we do have some others that we're working on. They've got bit longer lead times on them, probably in the kind of 3 to 6 month type range, but there's some interesting things we're being worked on in terms of like these are more kind of tailored deals and stuff like this. So in combination with the stuff that you kind of see mainly on the app and everything where people buy cover for particular protocols, there's a lot of tailored bespoke kind of work happening behind the scenes for particular people or funds or other organizations that want particular cover. And so the foundation has been doing a lot of work on those types of things. So I guess other items, I'm not sure if I mentioned last time, but we've got a new head of marketing. They've joined, so Brianna's going to be getting into things a lot more over the coming months. So you're just kind of getting an understanding of what's going on and how things work. But excited to bring her on, and hopefully you'll be seeing some more outreach and more visibility from us in the future, because we've got some more resources on that side of things as well. That's probably the main stuff. Happy to take any questions on any of that.
All right. If there's no questions, I can move on to the next item on our list. But yeah, overall, I wanted to say I think with these new bespoke cover products, expanding out and doing different kinds of deals and growing the team, all of these things are really going to help us continue to grow cover sales. I think with the fund portfolio cover, this is an easy way for us to grow cover sales pretty significantly and cater to an audience that is active on chain and has a lot of capital that they want to deploy, but also hedge against risk. So I think a lot of the things that we're working on the product side are pretty exciting, and I'm looking forward to some of the work that we're going to be doing here in the next 6 months, which brings me on to the next DAO Teams funding request. So earlier today, on behalf of the active DAO teams, I posted an RFC on the forum for our 12-month funding request. So our current request, which was for 6 months, that funding period is coming to an end here at the end of July, and the DAO team leads have outlined the proposed teams, their current priorities, and the DAO team's collective 12-month budget request in this proposal. We're shifting to a 12-month funding request format, but we still plan to share biannual updates on our progress and priorities going forward because within DeFi, 12 months is a long time. So we want to make sure that we're updating our priorities and acting accordingly, and sharing that with members for feedback, and just sentiment checking on direction. So you can find this proposal on the forum, but I'm going to provide an overview for you on the call today as well. So if you head to the Nexus Mutual Governance Forum, you'll see this. We give a review at the top of the funding request, the period. The review period for the RFC is going to be from the 2nd to the 16th of July. The NMDP review period will be from the 17th to the 24th of July. And then if there's no substantial comments, this will go to vote on the 26th and will be open for voting until the 31st of July. There are a total of 5 teams requesting funding. The first is the product and risk team, which I am leading. And our main focus here over the next 6 months is going to be launching new products that are currently in development. We're working on a few products. We've just launched some products here in the last week. Hugh had mentioned Fund Portfolio Cover. We have some other cover products that we've listed to support Sherlock. We're working with some other teams too that are developing new products. We're going to enter R&D on a new bundled type product that's designed to provide cover across multiple protocols. It's a little bit different from bundled protocol cover, but should give people more flexibility in the protocols they can use while having one cover NFT. We're going to do some more research and development on a new yield cover product. It's a new primitive that we think that can scale cover sales pretty significantly. So we're going to be working on that over the next 6 months. We're going to do some market research for DPEG cover before moving forward because there's some engineering work involved, and we want to make sure that there's demand for it so that we can prioritize it accordingly within our current engineering pipeline. And then we're going to be supporting new and existing syndicates on new product development as we onboard some. We have some that are going to be onboarded in the near future. We have some existing syndicates that are active, and we're supporting them on the product development side. And then we're going to be supporting the business development team with point of sale integrations now that we have the ability to offer coverage to users directly in a protocol's front end. So we're going to be supporting them in any way that we can in the next 6 months. We're also going to start a couple of research projects ahead of product development. One of them is going to be on bridge risk. We've had a lot of demand for bridge coverage, but there's been a lot that's changed here in the last couple of years. We need to dig down into the particulars ahead of coming up with new cover wording. So we'll, with this research project, we'll get better insight into the current bridge landscape, make a risk framework and a pricing model, and then start working on that product. And then lending markets have changed quite a bit. So just putting together a risk framework and a pricing model for that we can share with other syndicates so they can look at that accordingly, and see if this impacts anything that we need to update for protocol cover or some of our new products. On this team, it's myself and Hugh primarily. I'm heading up this team. And just you can see our performance over the last 6 months, but some of the overview is we've launched bundle protocol cover. We just launched fund portfolio cover. Between these two things, we've sold around $81 million in cover and earned a significant amount of premiums. And then we've supported some existing deals as well. All of that is included in the forum. On the community team, This is going to be focused on onboarding new members. The priorities there are going to be focused on onboarding new members, creating guides for members and staking pool managers, adding more resources to the DAO website, working with the R&D team on a governance research project, coordinating the governance reading group, which Sam has started here in the last several weeks, which has been really popular. Continue with the covering DeFi interview series and experimenting and doing some research on how we can engage more with our community, how we can attract more people to contribute to the mutual and be active within our community. You can see the performance on past deliverables on the forum as well here. For the R&D team, they are going to be focused on pricing inputs on new products. They're going to be working with the product and risk team on that, supporting on design and looking for edge cases on the technical products, and working on the business side for engineering heavy products as required. We've hired a new full-time Dune analytics wizard and just an analytics person as well. So they're going to be working on updating our existing dashboards and creating new dashboards to support the various DAO and foundation teams. Tomas is also going to be working on, improving our existing queries and then keeping the dashboards up to date with protocol changes. They're going to be working on the R&D side. They're going to be working with the community team again on this governance project, which you can learn more about on the forum. And then they're going to be working on the MCR calculation, which is a part of the tokenomics project. This is something that R&D is going to focus on as well. And then for performance, you can look at the work they've done in the last 6 months on the forum as well. On the investment side, they're looking at the divestment framework, which you can actually find in the forum right now. And they've been working on these investment proposals that are currently in discussion and governance on the forum. They're also looking at DAO treasury management and working with a service provider on this. There's quite a few things that they're looking at on that side, but there's not much idle capital left to invest. So really it's about ensuring that we have enough ETH and stables to make sure that we can pay claims and that we can satisfy demand for members to exit through the RAM, so providing RAM liquidity is needed. And you can look at their performance as well. They've talked about some of the investment proposals that have gone up, putting together a strategy for the Aave v3 USDC loan for the cover deal. All of that is on the forum as well. And then the marketing team. So on the DAO side, we're going to be hiring some full-time people to help out on the marketing team. Of course, as Hugh said, we've hired a full-time marketing person to direct our marketing operations, but we're going to need a social media manager and potentially one more hire to build out our marketing team so we can really push on the growth side and really strengthen our brand and create more awareness about the mutual and our various cover products. So that's what the marketing team is going to be focused on. Brandon is still building out strategy and building on her team. So we'll have an update on some of the priorities on the marketing side as well. But I'm really excited for us to build out our marketing team and kind of supercharge that department within the mutual to really help us grow cover sales. So across all of the DAO teams, we are requesting 706,500 USDC and 2,464 WNXM. Comparing this to the last 2 6-month funding requests, so annualized, it's for the last 12 months. This is about 113% increase, but that doesn't reflect the surplus that the DAO teams used to offset costs in the last year when things were a little bit more bearish. So when you factor in the surplus, it's a 44% increase from the last 12 months. But we have hired a new full-time contributor. We plan to hire up to 2 more full-time contributors, and this is reflected in that 12-month funding request as well. So if cover sales continue at current rates, though, and commissions are generated from those cover sales, based on our current projections, those should offset more than 2/3 of this funding request. Or if we continue to grow cover sales from beyond here, we estimate that the entire request will be offset by commissions earned from growth in cover sales. So those commissions are really making a difference in helping us be more sustainable in operations on the DAO side. But yeah, this is on the forum and open for everybody's review. We try and put as much information here as possible to give members an idea on the direction that we're working in. And we're also looking for feedback if anyone thinks there are other areas we could focus on, or if there are ways the teams could service members better or represent your interests more. So feel free to review and share your comments on the forum. I'd be very open to hearing comments from members. And this will be open for the next couple of weeks. So looking forward to engagement. And if anybody has any questions, either now or later. You can post those on the forum, but I'm happy to take any questions on this funding request right now as well. Okay. If there's no questions, I will continue on and just provide a brief overview of the grants program. So in May, we launched the Grants and Accelerator program to help us achieve some of our growth goals. This grants program has $1 million in funding for the next 18 months to fund individuals and teams that have the expertise necessary to conduct in-depth research, build out our technical infrastructure for new syndicates and distributors, and improve the user experience, and then simplify the integration process. So the grants program is focusing primarily on these following priorities: legal and regulatory, technical product improvements, improving the user experience, distribution and marketing, and integrations and composability. I'll provide an overview of a few key requests for proposals, or the RFPs, that we have on the DAO website on the grants page. One of them is the Covered Yields Marketplace. There is available funding for up to $50,000 for this grant. We're looking for a team to create a marketplace or modify their existing marketplace to allow users to deposit into a vault that includes native coverage by default, or with cover prominently presented in the user interface through a point of sale integration that can be an add-on in a bundled transaction. This functionality would provide users with a really easy way to purchase protection at the point of deposit, so each deposit is covered automatically. We're also looking for a team to help us with hackathon incentives. So we're looking for someone to design a hackathon incentives program for us. The available funding for this grant is up to $50,000. We're looking for an individual or small team to create or sponsor hackathons that bring together talented Solidity developers to solve problems, build new features, and find ways to improve the Nexus Mutual protocol. These hackathons should act as a funnel for hiring or partnering on ecosystem projects. Another RFP that's pretty high on the priority list is an incentive distribution contract for staking pools. Available funding for this is up to $15,000. We're looking for an individual or team to develop a smart contract that gives staking pool managers the ability to add token incentives to their pool. This helps with the cold start problem when somebody launches a new pool and wants to attract capital. These incentives should be distributed to the individual NXM stakers who have allocated capital into a given pool. The final deliverable should be production-ready code that can be audited and connected to an individual staking pool. This is a relatively simple contract, but something that would be nice for someone to develop that we can bolt on to these existing staking pools. We're also looking for somebody to help us with a broker sales and product package. Funding for this is up to $10,000. And we're looking for somebody that has experience creating brokers packages in the past to create a compelling package for brokers or people that want to help us distribute coverage. This can serve as the standard package used to onboard the next 100 brokers over the next several years. Some grants that we have that have higher available budgets, so both of these have up to $100,000 available for them. One of them is a DeFi integrated wallet solution. So somebody that can build a solution that would allow wallets, centralized exchanges, and their aggregators to natively integrate Nexus Mutual coverage into their interfaces and allow their users to purchase protection through at the transaction layer when they're looking to deposit. You would have something that would prompt you directly in a wallet. The other one is licensed insurance research. So we're looking for somebody with legal expertise to conduct research to identify how a third party operating as a syndicate can become licensed and offer insurance without requiring the mutual to move capital off-chain or convert capital into fiat. If the outcome of that research indicates that it isn't possible for a syndicate to become licensed, then we would expect that report to include the changes that would be required to allow a syndicate to become licensed. So again, these are a selection of the highest priority grants, but we have other RFPs on the grants page as well. We're also looking for grant application ideas that are outside of the existing RFPs we have, just as long as they fit within our current priorities. So if you have an idea, if you would like to build on top of the mutual, or if you have something that fits into our current priorities and you'd like to seek a grant, check out that page on the DAO website. You can learn more about the grants program on the DAO website, and we can share that link to the DAO website in the thread for today's call shortly. I want to move on and talk a little bit about OpenCover as well. So OpenCover is a distributor that's built on top of Nexus Mutual. They distribute cover on L2s like Base, Optimism, Arbitrum. And I wanted to highlight them because they've grown quite a bit in Q2. So we're working on our Q2 Insights report for 2024, but I wanted to give you a preview of some of the growth that OpenCover has seen since they've boosted their cover sales by 112% since Q1 of this year. In Q2, OpenCover sold 6.32 million in cover, and they earned the mutual 44K in premium through 180 cover sales with an average of 60 covers per month. As more users move to L2s to participate in DeFi, having partners like OpenCover and the Nexus Mutual ecosystem is incredibly powerful. OpenCover is also, they've kind of moved to the syndicate layer. They have their own staking pool, and they are, working to expand their offerings as well. But OpenCover is offering users a solution for those who don't want a KYC or those who are looking to buy smaller covers and want to be able to buy cover somewhere where the gas costs aren't going to make it cost prohibitive for them. So they're providing a really great alternative to joining the mutual as a member and instead using OpenCover, this layer that's built on top of us that's going to help us scale retail cover sales. So they've also been working on a new product as well, which can help the mutual sell a significant amount of cover in the coming years. They are very laser focused on growth. I was just talking with Jeremiah from OpenCover earlier today, and they have a lot in the pipeline. So they're focused on growth, just like the foundation of DAO Teams, and I'm really looking forward to working with OpenCover in Q3 and beyond. If you haven't heard of OpenCover before, I recommend checking them out on Twitter and heading to their website. We'll share a link to OpenCover in the thread for today's call as well. And with that, I'll turn things over to Sam to review the last week in numbers. Sam?
All right, let's look at the last week and review cover sales and fees earned. Last week was a great week where members sold more than $25 million worth of cover, and the mutual earned more than $165,000 in fees. And some of the top products that were sold last week were bundled protocol covers that included EigenLayer, Constellations. Also, EtherFi, Liquid, ETHWald saw a big cover by over $10 million. And the average expiry period has been lengthened to 29 days. When we look at the active cover per product type, we see that the fund portfolio cover that Hugh mentioned earlier, that was just recently launched, made a strong entrance. We now have 14.3% of our entire active coverage in fund portfolio cover. And I think it's a great success that we have bundled protocol cover here as well, with 24.7% of our representing more than 24% of our active cover. As we have new products, we will be diversifying our active coverage some more, and I'm looking forward to that. While I'm at it, I'd love to give a brief update from the governance reading group. As you know, we have progressive decentralization as one of our core objectives at Nexus Mutual, and we are trying to enrich team discussions with theoretical and practical perspectives. We have already onboarded a few external volunteers and hold bi-weekly discussions on Discord and on Meets. And if you're into coming to one of those, just let me know on Discord. And we have also recently put up a new reading list for the third and fourth quarter of the year. And this reading list mostly feeds off of some of the references that we have come across. And it's also nurtured from the Decentralized Society seminar that was recently held at MIT. With that, I want to open the space up for any open questions or any issues that any of the listeners want to raise here, or if there's anything else that Hugh and Brave would like to highlight as we finish the call. If not, you know where to find us. Please hop onto our Discord or come to our forum if you have any questions anytime. We'd be happy to help out. And if you'd like to have a NFT, have a POAP to serve as a memorabilia for you attending this call, let me know on Discord. I'd be happy to send you a mint link. Otherwise, I wish you a good week in DeFi, and we hope to see you soon on the internet. Bye.
Thanks, everybody. We'll talk to you all later.
Thanks, everyone. Bye.